Morning, some respite definitely coming in for the OMCs. But tell us, what is your assessment of the kind of balance sheet hit that the OMCs were taking? Our calculation and math tells us it's 20 rupees. It's only a 3 rupees hike right now. Do you think it could be a calibrated uptick in prices going forward too, and it will not just remain at this 3 rupees hike that we've seen today?
Good morning. So, petrol of rupees 3 per litre suggests a reduction in the losses of OMCs by approximately rupees crore per day. This will mitigate to capitation.
Right. We seem to have gotten Yogesh on a patchy line. We'll just try and... Yeah, absolutely, leading the chart. But Yogesh Patil is back with us. Yogesh, apologies, couldn't hear you at all, but you were talking about whether this one price hike right now of fuel is enough to repair the damage that OMCs have seen.
So, straightforward answer to your question, no. 3 rupees per litre is a very modest, small price hike. But it will reduce the losses of OMCs by approximately 141 crore per day, and this will mitigate some extent the working capital pressure. As per our calculations, to eliminate the losses on the petrol and diesel, the further price hike of rupees 11 per litre is required. The magnitude of this price hike is instilling confidence in the investors that the era of deregulated price of petrol and diesel may commence. This price increase will address the working capital finance challenges, ultimately reducing the burden on the short-term debt side. Concerns from the investors regarding the losses or the book value erosion can be on the lower side. So this is a small analysis. On the top of that, based on the statement made by the oil minister, 1,000 crore per day collective under-recoveries on the sale of petrol, diesel and the domestic LPG by the OMCs. If we decode it, under-recoveries on the domestic LPG cylinder is 670 rupees per cylinder. In the current scenario, this totals around 400 crore per day. So the remaining 600 crore per day under-recoveries on the petrol and diesel, it implies a 14 rupees per litre kind of a loss on the sale of petrol and diesel. So today the government has passed on only 3 rupees per litre burden to the consumer. So further price hike of rupees 11 per litre is required.
Yogesh, do you think that it's a calibrated move to increase the prices and not pass on the entire shock at one go to the consumers? We saw the CNG prices going up by 2 rupees yesterday in Mumbai by MGL. This follows the CNG price hike as well, and it's a gradual one which is going to happen.
We believe that this is calibrated move, this is cautious move, because on the other side, the government has to take care of the inflation part also. To our understanding, a very small example like that, if the transporters already take the hikes in their cost side, then it hardly comes back to the normal level. So any price hikes into the diesel side is really on a cautious mode, what the government is taking.
And Yogesh, in terms of how one should look at these moves, right? The government for a large part had not cut prices when oil was at 65 on the barrel. How much of that cushion is likely available, and how much of a deferment can the OMCs really afford? Can you give us some perspective on what the cushion could well be?
So in FY24, FY25 and FY26, when the oil prices were on the lower side, $60 per barrel or around $70 per barrel, that point of time, definitely, I'm totally agree. The OMCs were making a little bit supernormal gross marketing margins on the petrol and diesel. But if we look down into their capex cycles, that is inclining towards more building up the new refineries. That's one thing. Secondly, also some diversification into the renewable energies, where initial your returns on the projects are lower. So to fund that kind of a heavy capex, it was required little bit to take profits on some petrols and diesel. So that's understanding. So Secondly, the current situation is so fluid that it would be very difficult to give any kind of a thoughts on what kind of a losses OMCs can make in FY27. But we are largely sure in a Q1, OMCs will be in the red. They are going to post a kind of losses in a Q1 FY27.
Yogesh, just one last question and more data keeping than anything else. What is the break even at $110 a barrel? What's the break even that OMCs have in terms of the oil price or crude price at the pump?
So that's what exactly we discussed. Around 11 rupees per liter price hikes into the petrol and diesel can give them little bit relief from the under-recoveries.
Interesting. Okay, Yogesh, great to have you on the show today, and thanks for getting us that perspective on what OMCs are likely to do, and perhaps some amount of bounce is what we can expect today. On that note, let's take a very quick break. We'll continue our market chat with Kunal Bothra. Also have Sandeep Sabharwal join in on the show.